Wars often move two sectors strongly, energy and defense, but the timing and risk profile are different. Below is a clear way to think about it. Oil versus arms stocks during war. Oil stocks. Oil companies benefit when conflict threatens supply routes like the Strait of Hormuz. When traders fear disruption, oil prices jump, oil company profits rise, energy stocks often rally. This has happened during the 1973 oil crisis, the Gulf War, the 2022 Russia-Ukraine war. Large integrated oil companies such as Exxon Mobil, Chevron, BP tend to benefit when oil prices spike. However, oil stocks are very sensitive to the outcome of the conflict. If tensions ease or supply stabilizes, prices can fall quickly. So oil stocks are often short to medium-term geopolitical trades. Defense arms companies. Defense companies usually benefit more slowly but more consistently from war. Why? Because governments increase military spending for years after conflicts begin. Companies such as Lockheed Martin, RTX Corporation, Northrop Grumman, BAE Systems often receive long-term contracts to replace weapons used in the war. For example, Patriot interceptor missiles cost several $1 million each. Hundreds may be used in a conflict. Governments then place orders to rebuild stockpiles. That can create multi-year revenue pipelines. The strategic difference: oil stocks react immediately to conflict and oil price spikes, can fall just as quickly if tensions ease. Defense stocks rise more gradually, benefit from years of military spending. What investors often do in wartime. Some investors split exposure between the two. Oil equals short-term geopolitical risk play. Defense, longer-term structural spending trend. One caution: markets often price in wars extremely quickly. By the time conflicts dominate headlines, some stocks have already risen substantially. So the key question investors ask is not, is there a war? But, has the market already priced it in? Simple takeaway: if the Iran conflict escalates and threatens oil supply, oil stocks may move sharply. If the conflict leads to years of increased global military spending, defense stocks may benefit longer term.